So for today, as usual, we're going to go over last week. We're going to go over the week following, and then at the end, I'm going to talk about high time frame candle development and how I view higher time frame candles in relation to how you can uh, take setups on it. Okay, so going into last week, GU EU dollar. We'll start with now for dollar. As I said last review, we have had a closure on the 12 month above this high, right? This high being the high of this range, okay? So I'm in belief that dollar is going to make its way towards here. Okay. Now, looking at this from a weekly perspective, we have created PD rays at the high, okay? And we are pushing past this high. So this to me is not a turtle soup. I believe that we're going to continue higher, okay? Whether or not we get a retracement, I'm not going to force it, but if we do, that'd be good. But pretty much, I'm expecting dollar to gravitate towards this high, based off of closures, PD arrays, right? It's indicating price wants to go higher on dollar. Okay. In turn, we can expect for dollar and GU to get expansions lower. Okay. We see the same thing here. Euro on this range low. Okay, range high to low. We're closing below it, right? Multiple closures. 1, 2, 3, 4, 5. I'm anticipating for Euro to make its way down here. Okay. Now, how it does that is what we need to watch, right? I don't expect much heavy retracements, being that this range is equally traded. There's no liquidity pools here for us to really retrace off of. Okay. So I'm expecting some heaviness coming into Q1. Now, starting with that, looking at last week, we can see, right, if we do top down like we always do, okay, from last week, okay, we're bearish. You mark bearish key levels. Okay, we have a weekly key level. That weekly key level trumps any daily key level. Okay, we tap it on Monday. Do we have a liquidity pool? No, we don't. So we wait for it to create one. And then Tuesday is our SMT/soup. Okay. Now, I had not taken this, but I was going to take a continuation of this. And unfortunately, I missed my entry by a couple ticks. Okay. It happens. And it's all good. But the framework is there, right? If we mark out Sunday to Sunday, okay, bearish market, open high into a key level, we range, we soup or SMT, expansion, expansion. Okay. We've seen that on both asset classes, EU and GU. GU doing the exact same thing, right? Range, soup, expansion, expansion, expansion. Okay. GU has more failure swings. Yes, GU does have more failure swings. And if you notice, okay, now I'm not saying that you should expect this to happen, right? Because you never want to expect a retracement to happen. You want to follow a retracement if it happens. But if dollar is to come back to this PD array created at this old high, okay, and below all these liquidity pools, then GU and EU can tax some form of buy side liquidity. All right. But you do not want to force that, right? Dollar is very bullish. EU, GU are very bearish. So we're going to short EU and GU until it tells us not to. Okay. That's the framework, right? You want to follow high time from order flow until the order flow switches. All right. And you don't need to catch a reversal. Okay. Price is all about catching low time frame reversals but high time frame continuations. Okay, you don't want to catch a high time frame reversal right? You could easily be trying to long here, 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 all the way up. Instead, you catch high time frame continuation, low time frame reversals, right? So that about concludes EUGU. Bitcoin, I'm expecting Bitcoin to drop to this low. Why? Monthly candle closure inside, which means this candle is likely to do what? To retrace. The weekly candle, we have printed and respected this weekly order block. Okay. Remember, close below, tap, respect, and we've created the PD array off of this. Okay. So I'm anticipating for further expansion lower. Now, if it expands from here or comes back up to a premium, we don't know just yet, right? We have to wait and see. But as of now, that is what I'm expecting. Okay, Bitcoin to come to this low. And then from here, we're either going to have longs again, or we will start a bigger retracement to a discount PD array. So this gap. Okay, and then ETH looks even more bearish, to be honest. But it's likely that this gap will hold on ETH. Can you expect it to see the Friday high on Bitcoin? Friday high. Yeah, that's a possibility, right? But it all depends, okay? Because we've tapped this gap already. We did not close above it. We closed beneath it. Okay, so price could drop from here. It could. But does that mean there's a setup? No. Okay. If there's going to be a setup, we'll likely see either this or order block. Okay, and it all depends on time of day, day of week, and then how the power of 3 of the candle is looking. All right. So next, indices. Now I was bearish on, and I think I said this in the last review. I was bearish on S&P and NASDAQ, but NFP did not give an entry. Again, reasoning why is we have a 3 candle, right? Closure inside. This week, this month, we started respecting bearish PD arrays, right? Close below. What do? We disrespect this order block. We respect this bearish PD array. Okay? So that means we're starting to respect bearish key levels and disrespect bullish ones, which means order flow has then switched. All right. So I was waiting for this order block tap. We never got it. No setup, but we did have a nice sell-off NFP. Okay. Which means for future reference, NASDAQ could see a sustained move higher now. Okay. Again, I don't want to call a high to be put in, right? When we're at all-time highs, we're just pumping higher. So it's safe to say that this key level can hold for higher. But if it doesn't, right? Remember, you're bullish until, right? If this key level, this monthly key level fails, you then have a clear bias of this low, right? There's going to be this low. There's going to be, let's see. Yeah, probably that low, and then, you know, if we get any more sustained move down, you can just keep targeting liquidity pools. But as for now, I would expect this gap to hold for higher. And I would expect this week, right? If you think about it in a monthly perspective, candle 1, range, candle 2, could possibly be a soup of this range, right? We tapped it on a Friday. So we could see something like this week on indices. All right? That is what I'll be looking at going into this week, right? Monthly gap to external liquidity, right? Range low to range high. So if it only closes below monthly FEG, expect lower prices. Yeah, if price is obviously not respecting bullish PD arrays on a high time frame, right? That means that institutionally we're bearish. Okay? But you notice this entire way up, rejection block is held, 50% of this wick held, order block held, FEG likely to what? Hold. And then if it doesn't, you have a clear bias for the rest of the month and next month. Okay? But institutionally we're bullish, so you want to buy in bullish key levels, right? At key times. Okay? So this is what I will be looking at this week. See if there's any setups that come to fruition. But any questions over anything before I get into high time frame candle development? Nothing. We all good? I know, same thing as always. Same analysis, same breakdowns. I hope it gets repetitive to you guys. You should see it thousands of times. All good. All right. So we're going to get into high time frame candle development. I'm going to talk to you guys a little bit about the anatomy of a candle and how to trade more and have more setups than just thinking about it as one directional. All right. And let's use euro for this example. Get rid of this. Okay. If we look at the anatomy of a candlestick, okay, open, close. A bearish candle is going to open, go high, go low, then close. Okay. This is the anatomy of a candlestick. Now, on the lower time frames, it does not look like this. Okay. And actually, let me zoom in so this is a little easier. Okay. Again, we have our candle. Okay. This is what it looks like on any bearish candle is going to look like this, right? We're going to open, we're going to go high, low, close. Okay. And let me change this a little bit. All right. On the lower time frames, it's going to look like this. We're going to range. Okay. This is what it looks like on the lower time frame. But if you look at high time frame candle development, right? This is a move, right? Let me get this out. Okay. This is a move. This is a move. And this is a move. Okay. But I only like trading two of them. Now, if we look at a candle from a perspective, right? If price is going to go up, that means we need to have a bullish candle. If price is going to go down, that means we have to have a bearish candle, right? That's the practicality of price. Within this up candle right here, there's a bullish turtle soup. Go below an old low, key level, higher. Within this bearish candle, there's a bearish turtle soup, right? Go above an old liquidity pool into a key level, short, okay? And then same thing here with the close. Now, I personally don't like trading the close, okay? Just because some candles close at the bottom of them, right? You don't want to be caught in distribution. You want to be caught or you don't want to be caught on the other side of distribution, right? You want to catch the distribution. So, what I want to talk to you guys about is this right here. Have you guys ever marked out a key level? Okay. Waited for the key level to hit, and then you short the key level, long the key level, whatever, right? OSOC trade. Now, these are the most higher probable trades that you'll ever catch, okay? The ones that are with institutional order flow, the ones that have a sponsored high time frame key level, have a weekly framework, right? Those are the best trades that you're going to catch. But It's not the only ones that you can catch. Okay. This trade right here is very high probable. Okay. You'll notice every bearish order block before a reversal is a high probable long. What I mean by that is and actually let me just show a chart. Every bearish order block before a reversal is a high probability long. Okay. See this bearish order block right here? What else is this order block? It's turtle soup. Soup, range low to range high. Soup, reversal, dump, right? Meaning that every travel to the key level, right? And price is very fractal in this way. You can take price from the key level to your draw on liquidity, which would be where's it at? Which should be here to here. You can take price from the open of the candle to the key level, which is one of my favorite trades, here to here. And then you can take the one which I don't necessarily trade. I don't like trading it, but the close or the low to the close, which should be here to here. Okay. This right here is the anatomy of a bearish weekly candle, right? Open range, open high. This open high is also a soup. High of week, expansion, close, also a soup. Okay. And if you do Sunday to Sunday, it's even more clear. Okay. So, all good. So an order block is just low time from range. Think about it like this. An order block is the movement before the reversal, correct? Any order block on the high time frame is the movement right before a reversal. Okay? But do you know what happens right before a reversal? A KOD, right? It's I use Sunday 6 p.m. Georgia. Okay, but when you have a key level, right? And let's get rid of these lines. If I'm framing this weekly candle right here off of this daily order block, okay? And now what do we do to daily order blocks, right? If I'm going to trade this, what do I have to do? Well, I have to have a liquidity pool, right? A liquidity pool inside of this key level. Should be here. Okay. So when price opens right here, when price is opening and I have my charts marked like this, okay? This is my key level. This is my liquidity pool inside of my key level. Price has to get to the key level for us to have a setup, correct? Which means that this is now a kiss of death. Why? Because we're close to the liquidity pool. Okay, we've already had a reversal, counter trend. Okay, we are now close. And then you finally have, right, your trade setup. And then this is how that you can capitalize on more opportunity throughout the market with it still being high probable, right? If you're bearish and you're waiting for a key level to be tapped, that key level has to be traded to, right? Price isn't just going to spawn in the key level, okay? So you can either trade the journey to the key level or you can trade the key level to the dole, which I personally like to trade both. And I've been doing this for a little bit now. Not showing many of these trades because I wanted to show you guys the OSOX first. But if you look this week, okay. Now this didn't happen. Here, let me do this here. Now this was S&T, so I didn't take it, but it still stands the same, right? If I'm expecting this high of week, and I traded this by the way, if I'm expecting this high of week on this Monday to form off this rejection block, okay, I see on an hourly chart that we soup this low and we're starting the retracement, right? You don't want to force the retracement, but once the retracement is started to the key level, notice I'm not taking this. Why? Because you never want to force a retracement. You want it to happen, and then you take continuation. But if this wasn't SMT'd, you know what this is? Turtle soup, key level, that got SMT'd by GU. This is now a high probability long before the short. Okay, which is also what? This is also your bearish order block. Okay, on your 4-hour chart. Okay, so every key level that's sponsorable for higher low a week has a high probability set up before the reversal. Okay, notice it's not down here. The breaker is not a high probable setup. Why? Because you're forcing a retracement if you're trading this breaker, right? When price opens and goes low and you're expecting this to hold for high a week, you don't want to force this to occur. But once it starts to occur, order flow has changed. You now have a high probability setup into the reversal. Yes, Menti. If you look at it like this, right? Key levels create reversals. KODs are the last turtle soup before a reversal. If every reversal forms on a key level, every key level has a KOD right before it. Right? That's the fractality of price. So, and it's not that every week is going to have a clear one, right? Not every single week is going to have a clear KOD into a reversal. But if you're framing a key level to hold, price has started retracing to that key level, and you get a clear soup inside a kill zone, it's now high probable, right? You can literally, no joke, right? If I'm framing this to be the short, you can take this, you buy it here, we get into the key level, you then short it. Okay, this is now a high probability opportunity because price is not likely to reverse until the key level is met. Right? You have to think of it like that. Price is not likely to reverse until the key level is met. So yes, a kiss of death makes an order block. Does that make sense to everyone in here? I want to make sure you guys understand that. Order blocks are high probability trades. But, and I mean this, not every week is going to have it, right? But a lot do. If you look here, right, and I'm going to show you a lot of examples because it's very, very simple, okay? And you'll notice Romeo likes to take these trades a lot, though. Okay. Weekly gap, right? If you're framing this weekly gap is going to be set up, okay? And then you get what? Remember, we don't force retracements, we let them happen. What does price do? We reject and we start retracing. Okay, so you now have your context in which weekly gap is going to create high of week. You want to trade the order block into the high of week. Okay, you don't want to force a retracement, you let it happen. What's this? High probable trade. What's this? High probable trade. Into the reversal, in which you get your continuation, okay? These are the intricacies of price that not a lot of people know about, right? This order block is a high probable long. Why? Because do you expect price to reverse right below this weekly gap? Of course not, right? That wouldn't make sense. So this now is a very, very, very easy target and a high probability target at that for long. Okay. I did actually frame this setup, although I took that first turtle soup. Yep. So I don't like forcing retracements, right? Even on the higher time frame, you never want to force a retracement to happen, right? There's a saying, you follow order flow until, okay? High time frame order flow here is bearish. Okay? So I'm going to expect bearish key levels to hold price lower, right? That's the context. Higher time frame order flow is bearish. So I'm going to expect bearish key levels to hold price lower. But when we trade and we switch lower time frame order flow, which you can tell by closures on the high time frame, okay? Closure, right? Lower time frame order flow is now switched. You now have a follow order flow until, right? I'm now following low time frame order flow until my higher time frame key level's been met, right? In which you then again you follow the higher time frame order flow. Okay, it's kind of a word twister, but this is the context in which you want to trade, right? You never want to take this. Why? Because order flow before this is bearish, right? Taking this means you're trying to force a retracement that doesn't necessarily have to happen yet. But once this occurs, we flip this high, a retracement has already started, right? Order flow on the lower time frame has already flipped. Yes, this was high probable, this was high probable, then this was high probable, then this was high probable, okay? Why? Because they're following order flow. This is a low time frame reversal, but a high time frame continuation. This is a low time reversal, but also a high time frame reversal. You never want to take these, right? So basically, you're not trying to catch the bottom of a bearish market, right? Yep. You always want to catch a continuation of some sort, right? This setup is a continuation of the low time frame, counter trend to the high time frame until, right? And the key part is that until. This setup is a continuation of the low time frame until the higher time frame continuation, right? Now this setup is a reversal on the lower time frame, but it's a continuation on the higher time frame, right? Because higher time frame order flow is bearish. Okay, so you always want to frame a continuation in one way or another in every setup you take, right? Here, this would be a low time frame and high time frame reversal, right? Because price higher time frame is bearish, price lower time frame is bearish. Okay, so this makes this a lower probable setup than all these other ones. If you don't trade the close of candles, why trade the close to the new yearly open? If you don't trade the close of candles, why trade the close? I don't know what you mean by that. Every close of a higher time frame candle is going to be a weekly candle, right? So it's not necessarily you're trading a close. There's going to be a weekly candle with a weekly profile within that daily candles that you can capitalize on. Okay. Just because we have, even in consolidations, right? In consolidative markets, there's gonna be lower time frame trends that you can trade, right? This right here, if you look at this piece of price action right here, this is a range. Okay, this entire thing is a range, but it has a low time frame trend inside of it, right? There's all the time, no matter what price is in, there's always a low time frame trend. Why not wait until the new year opens since this week was the last week of 2024, so it's near the close of 2024? Because even the closure of candles still has trends, right? It still has opportunity to capitalize on. Right? This was a like you said, the last week of the year, okay? But there's still two high probable setups. Three, actually, four, five. Okay. Why? Because every candle has opportunity within the right context. It doesn't matter closure or not, right? Again, closure is relative. A closure on a yearly time frame may be a classic buy week or classic sell week on a weekly time frame. Okay? It's all relative. I'm saying the candle that you want to trade, okay? So I'm not trading a yearly candle, I'm trading a weekly candle. So if I'm trading a weekly candle, I'm not going to try and long a bearish candle. Right? Same with the daily candle. If you expect lower and you expect the daily expansion lower, there's no point in longing PM session, right? Trying to catch a reversal. Okay. So it's all relative to what it is that you're trying to trade. Okay. I hope this makes sense to you guys on some other types of setups that are high probable that you can trade. And I want you guys to forward test this. Okay, if we look at Euro, look at GU, whatnot. Now, as long as this week doesn't open like this, okay, if you're expecting, let's say, this bearish key level to hold for this next week, all right, now, again, you need to see how price moves, how price is acting. But if you're expecting this candle to hold for next week, remember, you get a reversal put in. Low time frame order flow is now changed. Okay. On the low time frame, there will now be a high probability soup as a travel to the key level. Okay. Not down here. You don't need to catch this. There's ways to catch it, but even me knowing how to catch it, I don't want to teach you guys how because there's no point. Right? This is a much better trade. Much more higher probable than taking something like this. Right? Because this is I like to frame it as like a double reversal, low time frame and high time frame. You always want to have some sort of continuation in your mind, whether it be high time frame or low time frame. So, watch that this week. I'll be watching it personally, and if I take it, I'll show you guys. So for the continuation trades, would you wait for midnight and hunt for liquidity? Yep, same as every other setup. Okay, kill zone, liquidity pool, key time, right? That's every setup looks the exact same. It's the framework that differs. Okay, just because I want to take a travel to a key level doesn't mean I'm gonna long right when 1700 opens, right? It's still always the same thing. Even look at this. And I think it was on EU. Even for these continuation trades, when was this? 2 o'clock on a Friday, right? Midnight, turtle soup, key time, pump. When was this? 3 o'clock on a Monday. Midnight, open low, turtle soup, pump. Okay. Right here, when was this? 4 o'clock on a Tuesday. Right? All these trades look the exact same. When was this? 2 o'clock on a Thursday. They're all the exact same quote-unquote pattern, but it's the logic that differs. It's the logic you have to frame, and then the pattern follows. Look at Tau. Yeah, I got you. Looks like a range. Again, I would not be fully bearish until we close below this low, but it looks like to me that we are forming a range right here at this low. So again, it's either going to be this, or if we create any PD arrays at this low, it'd be like this. But I wouldn't be bearish yet. I would stick to the bullish sentiment in price until this low that took this high gets flipped and closed below. Would you recommend we start trading London session instead? Yeah. You know, let me share something with you guys. I used to be a New York trader only. Okay. And recently I've switched my sleep schedule to where I go to bed at 10 a.m. Right? And for me, I'm in the Midwest. So like 9 to 10 a.m. I go to bed. Okay. And I wake up around 4 p.m. Now, is it the best thing in the world? No. But I'm able to stay up for London and New York because a lot of the times you'll spend your time framing a weekly setup and then you'll wake up and London had made the move and now it's 50 pips away from where you actually would have wanted to enter. Right? So, in my opinion, London is a very, very, very high probable time to trade, and I actually prefer it over New York a lot of the times. Okay? Because London provides this that New York doesn't. London provides a clear opening time, a clear liquidity pool or key level above or below price, and you can easily see stuff like this. Okay? New York, price is already, you know, done this, and then you're like, okay, now what are we doing? Okay? London provides clarity that New York doesn't. Okay? Not that New York can't give moves. It definitely can. But in my opinion, I do prefer London. Would you ever set limit order for turtle soup in case you miss a move? No, because I'm awake for London and New York, and I don't trade outside of my predetermined trading hours. So no, I never use limits ever. Yeah, no problem. Any other questions while I'm here for you guys? I hope this gave you guys a little bit of insight to other setups that you can frame. And high probable at that, not just setups that, you know, you want to catch more moves. No, they're high probability setups within the right context. All good, all good. Good. All right. Yeah, no problem. All right, so next week, probably not next week, maybe the week after, I'm going to talk about advanced stop loss placement. Okay. I'm letting you guys all have it this year, so stay tuned. But, yep. So I'll end it here. Let me